Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, a leading CFD brokerage that will certainly cater for your trading needs. Be sure to visit www.cfds.com for further info. Alternatively, you can visit the educational website as well with regards to the trading updates and charts, etc. Okay, now, interesting question I think that everybody will have in their mind right now at this junction is, will US markets continue their ramp higher on this light volume? Okay, I think that really is the question that everybody should be asking. Interesting question, and certainly one that we are attempting to answer as well. Okay, let's try and answer that. Okay, so first of all, it's all about US markets. So let's look at the actual S&P 500. Now, the S&P 500, as you know, on the weekly chart is certainly ramping higher. Certainly impressive in terms of its move, given the fact that we have these rate hike concerns, and even with December hike back on the table, that certainly has not deterred the bulls from certainly continuing to buy this market and pushing it and bidding it high. We've even retraced more than 75%. I mean, we are into a multiple resistance zone. I mean, if you just draw a horizontal trend line, you can see that you have multiple areas of resistance around this zone here. And even with regards to the HNS formation, I mean, even if we take out the retracement, even if you take the pivot lows, you can see we've even taken that out as well. So it's an impressive move. Nonetheless, has to be respected on a weekly chart basis, although the volume certainly seems to be drying up, given the fact that it's only Monday. So thus far, post Halloween, etc., certainly circumspect. I mean, the best article that I've read is on zero hedge stocks met up to dot-com highs amid decoupling divergences and fundamentals. That really is the situation. The dismal date this morning, ISM headlines 3-year low, ISM employment 6-year lows, construction spending growth weakened along with Atlanta Fed growth forecast collapsing, but December rate high hogs are rolled to 52%. And that really is a summation. I mean, good rate hikes up to 52%. Ignore this dodgy little image here. Let me just get rid of it. Okay. So everything is awesome, really. I mean, this is literally the song that should be played today. Everything is awesome. Certainly is. You can see the energy sector here. It's certainly moving higher, even with crude oil obviously going lower. You can see the S&P 500 in terms of credit spreads, 30-year yield, etc. The VIX to a large extent as well, coming into potential support. So these are all factors that I'm observing. Now, one of the biggest, charts, or one of the most important charts, and this is one of the reasons why I was actually bearish today, as you know, based on my analysis, is the actual chart of the VIX. If you look at the VIX itself, you can see the daily chart is into gap fill support. The 60-minute chart had this horizontal support on the verge of breaking higher. Okay, we had this series of concept of lower lows and lower highs, and then we actually broke out of it, and we actually built a base. And we were looking to potentially put an inverted head and shoulders formation and reverse higher. Now, this can be certainly seen clearly on the 10-minute chart. You can see that we had this inverted head and shoulders, right shoulder was going in, and obviously we're looking to push higher, given the fact that we had sold off on a late Friday. That obviously has not been the case, because we sold on the VIX in terms of moving lower quite substantially. We've even failed to hold this support here, and the market collapsed below pivot S3, which is pretty remarkable. Now, the 60-minute chart, we obviously have dipped below, and the question remains as to the next move in this market at present. And it shall be very interesting to see and observe that. Okay, so certainly dipped below, so the bulls certainly have the upper edge. Now, that's a lot of that is based on light volume. That's only concern and fear that I have. If I go back to the S&P 500, you can see on the weekly chart, we certainly have the light volume or dip itself. And the S&P 500 obviously is certainly lower below Friday's volume. Now we are into horizontal resistance here at this zone at 2105. The next zone of resistance will be 2113, and obviously you are looking at 2130, 2140, and we shall see whether or not we can sustain that move higher. Now we do have this rising contracting wedge pattern, so it certainly makes it very interesting in the next 24 hours as to what the S&P 500 will do. The 60-minute chart of the S&P 500, we did have this rising contracting wedge pattern, which I expected to break on the downside. This market certainly did not do so, and certainly chose to move higher. Now, obviously, you are into that horizontal resistance, as you can observe here and here. Okay, so two zones of resistance, 2105, and the next one will be at 2115. You have this unfilled gap up below, which I did expect to close, given the fact that the Shanghai and the Nikkei was certainly negative overnight, which is pretty remarkable. Now, given the fact that we had anti-QE talk in Japan, and the Japanese markets held the 200 MA and sold off quite substantially today, along with the Shanghai as well, down 1.7%, the Nikkei down 2%, excess of 2%, and yet the markets chose to totally ignore that and certainly pushed higher, even with Fed rate hikes on the table. Very, very interesting. Okay, it's total divergence. Now, even if you look at the chart of the Aussie and the Kiwi, certainly no major movement higher. Copper, oil, no major movement higher, so there was no real catalyst. Now, we can look at European markets and say, yes, there was some stronger data out in the UK, Eurozone, and German data, certainly to a large extent. We had good earnings from Ryanair, Lixil, Commerzbank, HSBC, beat Draghi's pro-QE interview. But then we also had negative comments as well. So we had Greek banks leading 14.4 billion. We have BP concerns, Vodafone concerns, Valiant downgraded late Friday, which caused a sell-off, and that was expected to continue. Saudi rating, Chinese economic data certainly weak. All these bearish factors were expected to weigh on the market, and that obviously did not occur. It's very hard for me from a fundamental perspective to go long based on the fact that you have the Shanghai and the Nikkei down quite substantially, almost 2% overnight. It just makes it very, very tricky, especially with the VIX obviously into support, and you can see that the 10-minute chart had the inverted head and shoulders pattern, which absolutely crushed today, absolutely crushed. So, interesting scenario, that's all I can say, and that's the only way I can explain it. Now, the only positive today was the movement in the actual Russell itself. You can see this bull flag certainly played out on the Russell, and certainly we did propel higher. Now, you do have potential resistance in this zone on the Russell, where previous support equals resistance. So, in this zone, we certainly have support on the Russell, and whether or not we can sustain this move higher is another question. 60-minute chart, you can see that there is horizontal resistance slightly above around the 118 level, and it will be interesting to see if we can sustain that move higher. On the 10-minute chart, you can see that we were certainly exhausted. You can see how even pivot R3 was taken out. I mean, we did have this H&S formation as well, which obviously coincided with the inverted head and shoulders formation on the VIX, and obviously you can see the markets continue their sustained move higher and did not look back at all. Okay, now the Dow Transports itself, this is an interesting chart. It is actually holding resistance, and the daily chart certainly confirms that. We have an inside bar into horizontal resistance, so going into tomorrow, that certainly is going to be bearish for the US markets. Now, looking at the Dow as well, whilst we cross-reference that with the Dow Transports, Dow certainly did make a new high today. Very impressive. Daily chart certainly has broken above that key diagonal trend line as well. So there certainly is some divergence there in terms of the Dow Transports, etc. So something again that we need to observe. We do have this horizontal resistance on the actual chart of the Dow itself, so you are into horizontal resistance, and we'll see whether or not this rally that we are observing at present can actually continue and has legs. Again, it's all about this contracting, a rising contracting wedge pattern, and whether or not we continue in terms of the movement there. Now, if obviously this resistance level were to get taken out, then you are looking at the next resistance zone, which is at 18,150. So that's going to be an impressive move. You're looking at 200 to 300 point rally on the Dow. Again, given the fact that the Dow Transport certainly are signaling, and also the actual VIX itself is signaling support, given the fact that you got Nikkei and Shanghai down overnight. It's interesting. It's very, very interesting. Okay. Now the yen itself, you can see that the yen on the daily chart certainly, if I go to a 60-minute zone itself, is certainly propelling higher. We did sell off towards the close itself, but you do have a double bottom on the yen, so you are looking at a potential reversal on the yen itself, looking for potential move higher on this double bottom support. Okay, and that obviously would signal risk off for equities. Going to your Nasdaq now. Okay, the chart of the Nasdaq. If I just go to the Nasdaq, which is over here. Okay, so the Nasdaq, we did actually go past the gap fill resistance. Okay, which is very interesting. Okay, and given the fact that we have taken out this resistance zone at 4694 at 4703, it's very hard to actually observe and read into that, given the fact that you had a volume was slightly lighter than expected. So given the fact that the volume had less conviction in terms of Friday's selling. So, and given the fact that we've come back off Halloween, etc., and the light and the volumes generally tend to be light regardless. Now, you do have the upper channel resistance on the Nasdaq itself. You are into pivot R3 resistance, so you do have resistance here at 4703. One would expect a potential reversal at this junction. Now, you do have the unfilled gap below, so one needs to remain vigilant with regards to that. But very impressive move nonetheless, okay? And you are into pivot R3 resistance on the Nasdaq itself. Now, cross-reference the Nasdaq with the semiconductors, or should I say the biotechs first of all. You are coming into gap fill resistance in the biotechs. If you cross-reference that with the semicons, bear with me. There we go. Okay, so again, we've broken out this key upward sloping trend line, and you are expecting weakness here. You do have gap fill above, and you do have a potential for a H&S formation on the semiconductors too. So this is again an interesting scenario, very, very interesting scenario as to which way this will play out going into tomorrow. Now, looking at the German DAX on the 10-minute chart, you can clearly see that we have this H&S formation, even though the DAX is at 10,980, 10,970. Okay, on the daily chart itself, you are into gap fill resistance. You do have 200 MA slightly above at 11,050 if the market does continue to rally. But the 10-minute chart is very telling and very, very important going into tomorrow. The 60-minute chart itself has taken out the key resistance at 10,850. So again, any retracement back to 10,850 will absolutely be crucial as to the continuous bias in this market. But again, very, very impressive given the fact that we've negated the move from Asia overnight. Also, we're ignoring the fact that the VIX is into support. Again, interesting scenario. Also, the dollar itself is catching a bid. As you can see here, we've caught a bid all morning, and we are coming into gap fill resistance on the dollar. So, interesting. Very, very interesting scenario. Also, given the fact that the economic data out of the EU zone was certainly stronger than expected, that would obviously lead to believe that Draghi will not do QE in December, and therefore would cause the euro to rally, and therefore would create a risk-off scenario along with the yen rallying overnight as well, given the fact that the Nikkei was obviously down. So it certainly is a puzzling scenario. That's all I can say at present. Now, there is a 60-minute H&S formation in the dollar, but given the fact that we're going to raise rates towards going into December, then you are looking at a potential gap fill scenario obviously occurring at present, given the fact that the actual risk-off environment certainly is at a higher probability now, given the fact that you are seeing equity markets at lofty heights. Okay, I think that's a wrap with regards to US markets. Again, just remain open-minded. My bias still remains short, given the fact that the move higher was based on a Nikkei and Shanghai that was weak. If the Nikkei and Shanghai were obviously flat to potentially positive, then you could certainly argue that you do have a potential move here. It's more of a short squeeze as opposed to organic strength. Anything that's a short squeeze doesn't last, and that's why my thesis is going to maintain the bearish bias, especially given the fact that the DAX setup is bearish and the Asian markets were certainly weak overnight. There are other arguments, but I think that will be sufficient for now. Okay, be sure to visit cfds.com for your trading needs, and again, it's going to be an interesting barrier here, especially the Nasdaq. If the Nasdaq can hold that 4700 level and start to move lower and melt lower, then the bears are in control. If the bulls push this Nasdaq above 4700 and start to propel it higher, then you have to well, I will certainly swallow my pride and swallow my ego as a trader, accept my loss, allow my stop loss to be hit on the Nasdaq, which is currently at 4720, and then I'll have to subsequently shift my bias towards the bull side and accept that QE certainly wins the day. Okay, goodbye now.